Hey traders, John Howell here. The market is fed up. The market is fed up. And where's it fed up to? Well, I'll let you know where I believe why the market is fed up and why you shouldn't fight the market and why you shouldn't fight the Fed. But also I want to share with you in today's video what are things happening with the mining sector overall and what I see coming this year. If you're or what I see coming this decade, basically, or the next 5 years or more, what I see really coming in the mining sector, what's really happening with that mining sector there, and what we could expect moving forward. Plus also touch on gold as well too in this video. So I'm going to have a bit of a market's fed up, but then also, geez, I just spoke high then, didn't I? But then also we're going to look at all the other stuff as well too. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so just before I do start, just to let you know that the free trading course I normally used to charge for this course, but I'm actually just giving it away for free, johnsfreegift.com. You can see there's actually 4 phases in here. There's about 10 hours worth of training. Just want to let you know that the free access is ending real soon. So if you haven't got the free access yet, make sure you do it now because I'm going to go back to start charging it because it's worth it. Okay, so yeah, just go to johnsfreegift.com, and again, I'm just giving you a warning before I do start charging again. This is your time to get free access to that. So just go get the free access. If you're struggling with the trading right now, you need help reading the charts or a trading system or understanding what goes into a good trader or the mindset, the mistakes you're making, everything in there. Just go to johnsfreegift.com. Now, let's have a look at the market is fed up, mining stocks, silver, gold. Let's have a look at this here. So the thing is about the market is that a lot of people are worried about the debt bubble, right? How much debt there is. Now, if you're worried about the debt, do you know the interest payments right now? How much the payments are when it comes to the debt is nowhere near it was back in, say, 1990, right? Even though the debt's bigger, because the interest rates are so low, their debt burden is not as high right now. So it's not really putting a big pressure on the debt. So yes, the debt is huge, but because interest rates are so low, their debt payment is actually nowhere near it was 20 years ago. Makes sense because of that. Now, when interest rates start to go back up again, that's when it's going to start to become a bit of a hassle there. And if inflation picks up, or if inflation picks up, and forces the Fed to not only stop the QE, but also start to put the brakes on by raising rates, that's where the Fed's stuck in a rock and a hard place. But until then, for the rest of this year, the market is fed up. The market, we all know that this market is created based on stimulus and not the economy. The economy right now has nothing to do with the markets. If the economy does go through another shutdown, the market's going to say whatever and going to keep going up. Why? Because it's not going to happen. The same thing's not going to happen again as it did last year. Why? Because the market hates uncertainty. The market knows, okay, we're probably going to go through another shutdown. We're probably going to go through a bit of a freak out here right now, and all that sort of stuff, right? So the market's pretty much certain of that, and it's not a surprise if that happens, right? Last year was a surprise. Last year the market freaked out because it was like, oh my goodness, so much uncertainty, market crashes. But look what's happening right now, right? Not only do we have 0% interest rates again, we didn't have 0% interest rates last year leading into it. We dropped it when the whole virus situation happened. But now we're still doing 120 a QE every single month to keep this market up. And we've got 0% interest rates, and we still have trillions of dollars on the sidelines ready to enter these markets. The market is fed up, right? And to me, it's just like it's only one way to go until they start to put on the brakes somehow, tapering, where they stop the 100 until they either raise interest rates, which they'll probably taper first, which is stop doing 120 QE every single month. And the first step to tapering would be obviously not to do so much in purchases, right? They're doing 120 QE every single month now and 0% interest rates. They'll stop. They won't do 120 QE. They'll probably go down to maybe 100 or maybe 80, and they'll start to taper just a little bit based on that. And then when that's not having a much of effect, then what they'll do is they'll then start to raise interest rates to start to calm things down. But until any of that happens, which is probably the first thing, which is the tapering of the 120, until they come out and they announce that they're going to start doing that, the only one way for this market to go is up. The market is fed up, and as you guys would know, if you know that I've always had, and let me just do this here. You guys know for the last if you go to this is my YouTube channel here, and if you actually look at this here, I've had a target here pretty much for the whole year I'll just show you on the charts anyway, for like the S&P 500, which is now making almost a new high right now. I have a 5,000 target. And if we really make a move, we could see even as much as 5,400 by the end of the year. And also Nasdaq, I have a 17,000 target on the Nasdaq up there, right? So again, I have this target up here. So the market right now, it's fed up. And please guys, if you don't think the market's going to crash, okay, because there's nothing supporting behind the brakes. And if you are worried about the crash coming, please guys, do yourself a favor and go to Ray Dalio's Big Debt Crisis so you understand what causes markets to go up, and especially in this environment right now, what causes them to top out and what causes them to go down. In the Big Debt Crisis book, you'll start to see a template of what creates this. And the template is basically what I just said there. Until they start to taper, the market is fed up and we're likely to go through probably an astronomical boom, especially leading in now to the volatile season. And by the way, guys, isn't it just amazing, this volatility? Especially right now, the volatility is going to pick up. And we are likely to see one astronomical move because of, one, all the money that's on the sidelines that's going to come into these markets. And secondly, the Fed hasn't changed anything. So with that, that's a double whammy. There's trillions and trillions of dollars still sitting on the sidelines waiting to enter this market, and that's going to create one of the biggest booms. Like you think the tech boom was big. Wait till you see this thing finished, right? It's like this is just getting started, right? They haven't even started their engines yet. You think the market's high? Wait until you see this thing, right? Please don't fight it. And if you're looking to short this market, don't fight the market. One, the market's in an upward trend, higher lows all the way up. S&P 500, higher low, higher low, higher low, higher low, all the way up. Don't fight the market. The trend is your friend. And secondly, don't fight the Fed, right? And until we start to get something, even a chart, technical analysis of breaking lows, of not on an upward trend anymore, or the Fed does something. Until that happens, guys, it's game on for the bulls. Now, not every day we're going to get our pullback. So if the market does pull back for a week, don't say, "Oh, John, the market's crashing." No, it's not. Okay. John, you're a moron. Okay, then. Okay, and you keep coming back watching me. Thank you very much. Who's the moron now? So we can see that through there, right? So the market is fed up. Don't fight the market. Now let's go have a look at the mining stocks, especially things like the GDXJ. Let's go have a look at that and the weekly charts here. One thing I do see happening right now, guys, is that the GDX is doing a little bit, I guess, there, but the GDXJ is the big one I want to give you an example of here. What's probably likely to happen when it comes to these mining stocks here is I wouldn't be too surprised, guys, just so you're aware on the big picture, I wouldn't be too surprised if we did this for the rest of this year. Maybe a little bit more move, but the rest of it like that for the rest of this year. Now, what I do see though is that if we're looking at this as a yearly time frame, if I bring out my years, right? So here is, let's actually bring up the yearly. Okay, all right. So I'm squeezing it up. Where is it? Okay, so we've got here. This is the end of the decade, right here. Okay, so that's the end of the decade right there. Okay, so this is 10 years out. If we think this, if you're investing in the mining sector right now, this is the way that I'm investing in the mining sector, but this is the way that I'm positioned for it and understanding and expecting more volatility to happen on the short time frame. But this is what I'm expecting to see when it comes to the mining sector. We may continue to do this, right? For maybe for the rest of this year, maybe even leading into next year, okay, in middle of next year. That may go into 2022. Heck, it may even go to 2023. We may be seeing a couple of years, just like Bitcoin did, right? Bitcoin did 2.5 years of sideways and then did 600% return. So if you're in the mining sector right now, if you're in the mining sector and you're in the mining stocks, please just expect that this may be the case here. But then there's going to come a point in time where I see inflation is not transitory. I see big inflation coming, right? That's why, oh, by the way, guys, when it comes to the gold price, when it comes to gold, I don't know, leave a comment below, but for some reason, in history, we go from hard money to soft money, hard money to soft money. We were hard money, which means dollar was backed by gold. Then, 1970, we went off the gold standard, and then it just become paper. Now we're going to go, we know we're going to go to a digital currency. To me, it makes sense to have a digital currency backed by real money, by something valuable, which is gold. So to me, it sounds like I believe gold's going to have a big role in it. Therefore, that's the reason why I see gold being at 5,000 plus at least, maybe even 10,000 over the next maybe 10 years or more, right? So I don't know, leave a comment below, guys. Let me know what you think about that. Do you believe we're going to have a gold? Like, to me, that just makes sense, but I could be wrong there. But anyway, back to the mining sector. So I'm positioned in the mining sector right now. And just all I'm saying is that for the next 6 to 12 months, I wouldn't be too surprised if we actually just see this here. I wouldn't be too surprised if we just kept going sideways. But then I believe there's going to come a tipping point. I don't know when that's going to be, but there's going to come a tipping point. And by the way, if you try to time this, you're probably going to, you just like with Bitcoin, right? It's going to be like 10,000 before you know it, it's going to be 30,000 in Bitcoin. By this here, before you know it, we're going to start to go through a big move and we're going to start to see something like this. Now, we're not going to do that, right? It's going to go up, it's going to go down, and we're going to see something like that, right? Then we're going to see that. So I truly believe that we're going to see one astronomical move to the upside. And like, if you think that the Bitcoin boom that we just saw from 10 to 65, you think that was big, you ain't seen nothing yet. One, the big bubble, there's two big bull markets right now that I'm taking advantage of. The short term this year, it's the market that's fed up. The big boom the market is fed up, and I'm not fighting the trend, and I'm not fighting the Fed. I'm not fighting the market, I'm not fighting the Fed. Because it's just not right. And then secondly, I'm also positioned for this decade to make an extraordinary amount of wealth. By the way, I'm positioned for that as well too this year. But for this decade, my long-term wealth building is this here, because I'm very, very confident by the time we see the end of this decade, I have a portion of money that is on the sidelines. No, it's in a separate account, but in the mining stocks, that by the time that this year here, this is going to be worth to me a lot of many, probably at least $20 million plus by the time this is finished. That's just the way that I see it, right? Now, again, that's going to take a lot of time, right? We're in 2021. I see that happening by 9 years from now. That's the way that you should be thinking about the mining sector. So if the mining sector goes down a little bit like here, like that there, and then it goes back up a little bit like here, and then we go sideways a bit, then we come back up and then we do this here, right? I wouldn't be too surprised. Once again, guys, I wouldn't be too surprised. There's going to come a point in time where we are going to start to see, where's my green earth, right? We're going to start this. There's going to come a point in time. This sideways phase, this volatility up and down, may last another year or more. But there's going to come a point in time where we're likely to see that. And we're going to see one of the greatest bull markets we've ever seen, especially in that. And then I believe alongside of that is going to happen with gold. That's why I believe this is the decade for metals and miners. This is the decade. And so many people that they're investing in these markets the wrong way. They're getting in now and they're looking for a big move. They're getting in now, they're looking for a big move. And so that's probably the worst thing you're doing with the mining sector right now, right? Especially where we are right now. We're just still stuck in a sideways range. There's no trend analysis. It's just sideways. And so the big picture, what I'm seeing there, that's what I'm seeing. The short term, hey, there's a massive, the market's fed up and don't fight the market. There's a massive bull market just underneath our feet. I'm taking advantage of that. But then I'm also positioned to take advantage of this decade. But then on top of all that, me and my traders are taking some amazing me and my private clients anyway, are taking some amazing short-term opportunities for cash flow. So I'm taking advantage of all these markets. Please, guys, I hope that you could see, this is just what I'm seeing. This is how I'm positioning myself. And this is the reason why, guys, I have no doubt, for me personally, by the end of this decade, I'm going to make probably $30 million plus out of this here. So that's my goal anyway, is to make $30 million by the end of this decade. I don't know if it's going to happen or not, but that's my goal, is, again, by the end of this decade, is for me to actually make that much out of these markets. And so I'm positioning myself, doing my homework, but then also protecting myself, because if I am wrong, I can get out and I can still filter around and do my thing there. So I hope this helps you out today, guys. Remember, just a quick little recap here. One, don't fight the Fed, don't fight the market, and just until things change, nothing's going to change. This market's going to keep doing its thing. Yes, we're going to get pullbacks. We're not going to go up every day. We are going to go for runs and we're going to get pullbacks. That's the natural flow of the bull market. Secondly, when it comes to the gold market, I see over this decade that we're likely to see probably a 5 or even a 5,000 plus print when it comes to silver. On a conservative basis, I have a 3,000 target. On an absolute conservative basis, 3,000 target on gold. But I see a lot higher prices, because I believe when we eventually do stop all cash and then we go to a digital currency with the new world order that's flowing through this decade, I believe we're going to see the gold, because it's probably going to be backing something a lot higher than what we're seeing right now. And then also when it comes to the mining sector, don't be too surprised if we just saw a lot more flattening out. While a lot of people are excited about crypto and a lot more people are excited about the stock market, they're going to be focusing on that. So therefore, the mining sector and gold and silver might not be doing much for the next maybe 6 months, 12 months. I don't know. It could be 3 months and then we start. It could be 6 months, could be a year and a half, and then we start to see that big run up from there. But at the end of this decade, I see extraordinary moves, first initially happening right now this year in the stock market, and then as we start to filter through into 2022 and 2023, that's when we're probably likely to see one of the greatest bull markets we've ever seen in history happen in the mining sector. This is my thoughts. This is my opinion. I could be wrong, so always protect yourself.